Good evening, everyone. So today's panel discussion is AI in finance. So before starting the panel discussion, I just want to set a brief context on what we want to discuss today. So, uh, so if you if you think from a perspective that the entire artificial intelligence and the data which goes into artificial intelligence, this may be treated as a fuel of the entire AI economy. But the digital trust which we need to build in, that would be the currency of the economy. So the entire assurance, entire governance would revolve around this fuel and trust ratio. So on today's discussion, we have two stalwarts, Mr. Srinivas Koora, who is the MD of Xelpmoc and who has been on the side of production and development of AI, including agentic AI, and Mr. Jaykumar Shah, who has been from a finance side, who has been into signing lot of numbers which may be AI generated, which may not be AI generated. So the answer would lie in what is the correct number, what kind of assurance one needs to place on. So my first question with Mr. Srinivas today is, uh, Srinivas ji, from a perspective that there would be always a expectation gap between what an entity is required to deliver and what is the expectation which builds out of it. So from a perspective of a developer, what is your perspective with respect to what is the gap between the expectation and what goes out into the production?
Good evening, everyone, and today it's my privilege to be with the leaders who understand both the promise and the pressure of running a financial institution. Like for the past few years, we have seen that AI has moved from a buzzword to board meeting agenda. But what we believe at Xelpmoc and what we have been working for last few years, especially on the agentic AI, data science, ML is, what is more important is how clean your data is, how imbibed your workflows are. Because most of the times what happens is everybody start feeling that key AI, in case if I implement AI, it can take care of everything. It's not that. AI will help you to increase the efficiency and it will give you compounding advantage in case if you implement it properly. I'll just give you two classic use cases. Basically, we are working with one of the very large developer. There, the problem what they had is like they receive close to a few hundred crores every month, and they are not reconciled for almost 42 days, sitting in escrow account, and they have close to about 60 to 70 chartered accountants. The process they follow is like based on the construction, they keep on raising an invoice, and customer at times they might pay from X bank or Y bank. The process what they follow is the escrow books of accounts, the bank statement, their own books of accounts, and customer mandatory has to send them a email or WhatsApp message stating that yes, I have made this particular payment. So when we have studied their system, when we have implemented AI, what we were able to do is the process which used to take about 42 days, as over time it has come down to 8 days. The big benefit for them is they are able to use those few hundred crores at least 30 days in advance. You all are bankers, you can know interbank, even if you apply interbank lending rate, the benefit which they are going to directly or add to the bottom line. Now here what I would like to say is, when you implement AI, what is more important is how clean your data is. Now here when I say that even in spite of implementing AI, why it took 8 days or 9 days, the reason being they follow a process where customer has to send an intimation. In case if the customer has not sent an intimation, it takes time. So today the models are so robust that they are able to read structured data, unstructured data, handwritten data. So what I mean is like the data plays a very key role, as you rightly mentioned, and the workflows and governing principle around that. What are your internal controls, internal policies? Because most of the times what we have seen is when we go for implementation, they have 10 steps. The moment we start implementing it, those are not 10 steps, it's more than 10 steps.
Thank you very much, sir. So I would like question to Jaykumar ji. So, so from the other side, so I think let's move to the other side of the table. So Srinivas ji has been on a developing side. So from a finance side, you must be signing lot of numbers, and some of the numbers would be coming from a AI generated tool or platform. So from a CFO of one of the largest NBFCs in India, uh, where is the needle which has moved with respect to AI? Is it a collection process? Is it a fraud detection process? Is it any other process where the AI needle has moved the most? So what are your views on that?
Thank you. And firstly, thank you to Josefa for, and JHS for inviting me. Few qualifiers since I'm sitting in middle of accountants. I'm not an AI expert at all. I agreed to speak so that I'm in between accountants and, less knowledge helps. With that rider, I think the most important thing we need to understand is that AI helps, right? It is the moment you think AI is going to generate everything, pardon my words, we're in fool's paradise, right? The most important thing is today in the banking world, how does a transaction happen? Are you first capturing everything pure, right? AI can help you do certain tasks, not to capture the basics. So what we've been working on today is thinking how best to use AI. There are certain elements like payables and certain operations side where AI is actually helpful because there is scale. On that scale, when you're employing 10 people, when you're putting receipts through, AI can actually read and tell you whether there is a fraudulent receipt. To give you an example, the other day we found out, very interestingly, I don't know how many of you, anybody in this room would have tried, you get a normal receipt from, say, Money's, right? You scan the voucher, you put it in, and you say, AI, can you modify dosa to an idli or a masala dosa? It will actually do it like an original invoice and you upload it. A human eye cannot detect it. Even better, the guy then claims that same receipt with a different bill number, with a different date, and keeps claiming it for 5 days in a row that he's eaten at different places. And they're as small as 120 rupees, 200 rupees. Per meal you get 500 rupees, you won't even detect it as a fraud. Some of these things AI can actually help. But when we talk about financials today, right, the most important thing is get the basics right, get your numbers flowing through without a touch. That is number one. Number two, get RPA bots in to make sure all the processing that you do, get that accurate. Then when numbers flow in through a trial balance or as an output, get the output dump where you can actually ask AI questions that's useful. Today, many of you all would have seen the $500 million bill that one of the companies got, right? The biggest stress for me is the token cost. Today, cost income ratio for any company is very important. How much do you give a person in an NBFC? You go to ask any of the top consultants, they all have $100 budgets on a day, right? So how are you actually going to make it meaningful? Do you make a guy have fun within finance, or do you make sure his time is better utilized? Over a period of time, how are you ensuring that not just as finance, you give that power to the business? So our whole objective is finance. If you think about it, you'll have 30 people, 40 people. That is not the power of AI, right? The power is when you have 40,000 people on your sales side and they can utilize it for their work. That is real. We are not there. That's the aspiration we're trying to work to in the next 12, 24 months, to see all the data that we have, right? We have lots of records. We have 22 million customers. How all my 1700 branches, when a person goes out there, he doesn't have to ask somebody in finance, Kalka data kya tha? They get ops reports. That person should check and the AI should tell him, last year same time you did better. Aaj to barish bhi nahi hai, thoda dhanda aur kar lo. Right? Now if that kind of AI can get implemented with a reasonable amount of cost, that's where we are trying to get to at least. So basics, I think we are improving. but the real value will come in when it's utilized at mass at a low cost.
Thank you, Vach. Just a follow-up question on that. Which are the processes or which are the areas where the AI has moved the most? So, is it a collection? Is it a fraud-related detection process, or is it something which is dealing with expected credit loss or ICAP? I mean, which are the areas which, in your perspective, AI has moved very fast?
So in our case, as an NBFC, at least I've seen it in others also, the collection side clearly is a winner because there you have a specific clientele whom you're targeting. Makes it a lot easy in terms of benefits that you get from it. Operations, again, there has been value which we've got out of it. In case of finance, on the payable side, we've seen benefits come through. On the sales side is where it's much more challenging. Right, especially if your ticket sizes are smaller, if you're very retail and not large, then at that small retail ticket size, for it to be meaningful and make money is important. To give you a sense, just so that everybody is here, right? If you have 100 customers you go to and you convert 2, that's considered to be good conversion. Now imagine you're giving a 5 lakh rupee loan. So if you give 2 customers 5 lakh rupee loans, the amount of interest you earn in a year at even a 10% is X amount, right? Which is say 10,000 rupees. Now on 10,000 rupees, to hit 10,000 rupees of income, okay, you're going to run the bot or AI to target 100 customers, call them, spend the token cost, spend the human bot management cost. Finally, you learn a 2% ROA. Which is actual return after all the costs. What are you making after that, right? Sounds very sexy to say I use AI for sales. But at the end of the day, what are you selling? If you're selling the same thing for 500 crores, very good. If you're selling 5 lakh products, then you might as well think as to where do you do it. So there are different use cases. Some look very good, some actually deliver value. From my point of view, along with the CTO, the question is always making sure spend where you can drive value. Some you want to do POC, it's an investment, do it. But beyond that, make sure there's value which comes out.
Thank you, Vish. I think you have touched the very core point on the cost-benefit analysis. So, from a development side perspective, I would like to ask Srini sir on what would be an ideal roadmap for a mid-sized entity who wants to develop an AI, who wants to do a transition from a traditional model to an AI model. So what would be an ideal roadmap, say for the next 12 months, considering the capex cost, the development cost, and what would be the implication and what suggestion you want to give to the
So the first and foremost important thing on the investment, the cost side, we need to understand one thing. There are generic AIs and there are AIs which are customized based on your workflows. Because the reason being, when I'm using generic AI, when I'm going to fire a query, I don't know how many tokens I'm using. You have seen that few companies, they have budgeted for 12 months, they have exhausted in 4 or 5 months. But what happens is when you are having the customized LLMs, yeah, customized AI tool, you exactly know how much you are spending for a call or per a transaction or per a document. So what helps is here you are able to predict what is your cost and what is your ROI. So I'll give you one classic example. Again, this is very old one since I worked for Just Dial. For example, during those days you had Google and as well as Just Dial. We say that in case if you want to know what is the age of Amitabh Bachchan, you need to go to Google. And in case if you want to know something about any phone number about business or any product, then Just Dial is the destination. So here, I don't require a generic AI for my day-to-day operations when I'm very clear on my workflows, what I want, what is the expected outcome. And for next 18 months, when a mid-size NBFC or a bank, if they are looking to introduce AI, what I suggest is rather than building in-house large labs, they should partner with a team who can give a better ROI where you have a clear visibility with respect to what all automation I need to do. Like sir has said that I am willing to invest on POC. Yes, you need to invest on POC in case if the outcome is desirable. I think like those are the areas first you need to start picking.
Thank you very much. So, since the topic is of AI in finance, so I would just like to ask one more question on a regulatory perspective. Since RBI has been constantly hammering on the model risk in AI and also fairness, audit trail, etc. So, from a finance perspective, how you are taking an assurance from your team, from the overall operations with respect to the fairness, transparency, and also whether there are any model risk in any of the AI generated numbers. So are there any checks and balances which from a CFO point of view you are putting in place?
So I can tell you honestly, today I don't have AI generated numbers. I'm far too old school to just rely on it. So we do have numbers coming out of our normal systems. They're automated, which is old school automation as they call it in Srini's world. What we are trying is more from an analytical point of view. So as I said, I don't actually get great value if I spend a lot of money within finance on just AI. It's more when I take it to the business, right? The business insights that can be derived, the business value that can be derived from the numbers, and the alignment that it brings from an organization point of view. So to give you an example, today we've got a data lake. We pull numbers from them, we report it to RBI. There's no need to put AI on it. The same data lake, when the business uses it, they have umpteen amount of questions of what they can do well, what they can't do, what they need to further do in terms of, next month, month after. What are the things that can make more losses or more profits? Where is it break even? Where to invest, not to invest? Those all questions actually AI can help. Those don't have a regulatory piece. Because what are we doing today? Today when at least, we work through things within FP&A, somebody will come from the business and say, can you make these analysis? You take 4 hours to make something. It can actually be done in 30 seconds. Because the same data somebody is working on. That is where I think it has a lot more value that we can derive, at least to begin with as an organization.
Sure. Thank you very much. So, just one last question to end this panel to both of you. So, we started with a question of building the digital trust in AI, because as an auditor, being a chartered accountant firm, and we have been always being a custodian or a guardian of building a financial trust. So now the time has come where the things will move to building a digital trust. So what message you want to give to all the professionals, be from a development side, being from a finance side, to keep in mind to help building that digital trust?
So first and foremost important thing, there is, as far as data is concerned, it's non-compliant, non-negotiable. Nowadays, you have models, like I said, that generic AI versus the customized one, it can come as a black box, where the data is not leaving your premises. And most importantly, these models even work without even internet is there. So as far as the data is taken care of it, and that it's an on-premises, I think that should help as far as the concern or confidence any organization is having.
Thank you very much.
I'll take it down to more basics. Make sure that today, when the customer interaction happens, the data that goes into your base systems, that audit trail never disappears. One. From there to the data lake or to whatever systems you take before it goes to your ERP, that never disappears. That is something as a CFO, I want comfort over that data is accurate. The moment that happens, from there to AI, if there is no touch points, make sure there are enough recs in place to ensure that whatever we publish, if anything goes outside or inside, there are enough checks and balance to make sure it's accurate. At the end of the day, the people trust us because they believe the CFO and the auditor or CFO and the assurance partner are there to give them comfort over factual numbers. What you make out of it as meaning and how you derive it, people are very intelligent to do things from there. But if fundamental accuracy comes under questioning, then you'll have serious issues. So at no point in time leave your fundamentals, then you can build whatever buildings you want over that.
Thank you very much. So with this, I think we'll have some time for any question and answer from the audience before we conclude this panel discussion. Thank you very much for a very
Thank you so
insightful
much.
session. Thank you.
Thank you.